A systemic meltdown has shaken the financial world this week as dozens of banks started to suffer repeated outages all around the globe. Just this week, bank systems were down in 7 countries across 5 continents, leaving tens of millions of customers extremely frustrated. In the U.S., thousands of customers reported outages in the Bank of America app on October the 1st, right when rent, utilities, and other bills are often due. Many of them revealed that even after the system was allegedly restored, some operations were not working, which left them late on several bills and forced them to pay credit card interest. But despite the major inconvenience, things could be a lot worse. For instance, in New Zealand, now in its 7th week of nationwide lockdown, millions were left without access to their money, as banking services were down at a time all local branches were closed. One of the country's largest lenders, Kiwibank, faced a major outage on Tuesday after a DDoS attack on New Zealand's 3rd largest internet provider resulted in IT crashes at a number of lenders, including Commonwealth Bank and ANZ Bank. The latest IT outage was just one of a series of others the bank has suffered over the past 3 weeks. During a DDoS attack, hackers inundate the system with millions of bots that try to connect to a given website all at once. Consequently, the website crashes and services become inaccessible. Servers are not broken and data isn't stolen, but it can still spark a cascade of systemic failures that can take days to be reversed. Of course, New Zealand and the United States aren't the only countries facing massive outages within their banking systems in recent weeks. In banks across the United Kingdom, South Africa, Venezuela, Japan, and Mexico, operating failures were also reported recently. At least 24 million account holders of Mexico's largest bank, BBVA Mexico, were left unable to use the bank's ATMs, its mobile app, or make in-store payments for over 20 hours, starting in the morning of September 12th. The bank said in a statement the outage occurred due to a system update failure and assured its customers their financial data was not compromised. It had nothing to do with the outside world, stressed Jose Terrazas, the bank's director of communication and corporate identity. The bank and its customers' information is secure. What we did was undo the changes to the system and return everything to as it was. Strangely enough, less than a week after the BBVA outage, Santander Mexico also faced an operational crash that left customers across the country unable to use their debit cards at the ATM or in stores. One more time, it was said the problem was related to internal failures. However, considering that Mexico recorded millions of cases of identity theft in recent years, being the 8th place in the world in terms of stolen banking data, according to the country's central bank, Banco de Mexico, it seems that the banks were trying to cover something up. Some financial analysts argue that the outages are linked to a cyber attack planned by highly professional illegal organizations. Cyber theft has become common in the country due to the lack of enforcement of existing laws and the absence of adequate legal tools to hold attackers accountable for their actions. In 2018, Bank of Mexico's SPEI interbank transfer system was the target of massive cyber attacks, as Wired reported. A group of hackers, thought to be working for the North Korean state-sponsored group Lazarus, tried to steal $110 million from the Mexican commercial bank Bancomext. A few months later, a smaller yet still elaborate series of attacks allowed hackers to siphon off 300 to 400 million pesos, or roughly $15 to $20 million, from Mexican banks. From then on, Mexican banks have faced repeated outages. One of the biggest disruptions happened during last year's Buen Fin, a Black Friday-inspired event that occurs every year across the nation. On that day, the online banking system of several big banks, including BBVA and Citibanamex, recorded an unprecedented collapse, and millions of customers could not complete their purchases. Meanwhile, in the UK, where the Financial Conduct Authority is said to be deeply concerned about the increasing number of technology outages over the years, the regulator's Executive Director of Supervision, Megan Butler, revealed that the number of incidents of Operation Resilience breaks reported in 2021 have surged by 300% year-on-year. Butler argued that this is a growing trend and the number of reported IT failings continues to increase. Late in July, the websites of 6 big banks, Lloyds, HSBC, Tesco Bank, Bank of Scotland, Halifax and Barclays, collapsed allegedly due to a global internet outage caused by a software update failure at hosting service Acume. 1 month later, the apps of 5 of the 6 banks went down for days. The outage was attributed to a problem with U.S. payments company TSYS and left consumers without access to their credit card services and account information for almost 1 week. Some outages can be much more disruptive than others, explains Nick Corbishley in a recent article published on nakedcapitalism.com. In 2018, Banco Sabadell's botched IT migration of its UK subsidiary TSB, branded the biggest IT disaster in British banking history, left hundreds of thousands of customers unable to access their online accounts for weeks on end, he reported. Several customers faced acute financial losses and consequently saw their credit ratings deteriorate. Millions were unable to make mortgage payments and have fallen behind on their bills. More than 1,300 clients became victims of identity theft. The crisis cost Sabadell hundreds of millions of pounds, 80,000 customers, and 1 CEO. It was probably a key factor in scuppering BBVA's takeover of Sabadell late last year, Corbishley pointed out. On the other side of the Atlantic in Venezuela, 16 million customers of the country's biggest bank, Banco de Venezuela, recently suffered a 5-day outage as the bank's online platform crashed. The clients used social media to express their growing frustration. On September 20th, after the platform was restored, Venezuela's Vice President Delcy Rodriguez blamed the U.S. government for the prolonged disruption, saying that U.S. officials launched an intense and aggressive cyber attack against the bank's IT system. The attack was seen as an attempt to derail Caracas's plan to launch a new currency, which was effectively put in place on October the 1st. Even though it's impossible to know whether or not Rodriguez's allegations are true, the U.S. certainly has the capability and intelligence to do so, and it also has the motive, as it's engaged in an economic dispute with Venezuela. At the same time in Japan, Mizuho Bank, one of Japan's 3 mega banks, suffered from its 8th consecutive IT system failure on September the 30th, recording almost 1 disruption every month. During the latest incident, a system error triggered a major delay in foreign exchange transactions. Over the years, the bank has spent approximately $3.6 billion trying to fix the system problems, but it hasn't had much success so far. Another bank that's been plagued by repeated IT system problems is South Africa's largest lender, Standard Bank. In late April, the bank suffered hardware issues that downed its internet, mobile, and ATM channels for over a week, leaving customers unable to pay their bills or access cash, the writer reported on the Naked Capitalism article. By early September, the bank's mobile app was down once again, causing customers no end of hassle. Tuesday this week, the mobile app of another South African bank, Capitec, also went down, he exposed. Mergers of large banks have a tendency of leaving behind serious IT system issues, Corbishley highlighted. This is particularly true in the case of cross-border mergers. One of the main reasons for this is that many banks are still largely run on creaky legacy systems built in the 1970s that make it all but impossible to merge IT systems without storing up big problems further down the line, he added. In 2019, during a Treasury Select Committee investigation over what went wrong at Banco Sabadell, Alison Barker, Director of Specialist Supervision at the Financial Conduct Authority, was asked to what extent legacy systems are still being used across the UK's retail banking sector. It's still pretty extensive, I'm afraid, said Barker. Some pretty cool systems are still run on the legacy. They still use code back from the 1970s on some of these systems, and they've just built on top of them. However, many of these big banks are still trying to compete with younger, tech-savvy firms whose IT systems are significantly more flexible and modern. And that is creating serious problems in the sector. If you are a large retail bank, you are probably dealing with legacy systems, the Deputy Chief Executive of the Prudential Regulation Authority, Linda Nelson, said during the investigation. Nelson mentioned that when fintech companies add new features to their apps, big banks usually do the same, even if they don't have enough tech support to do it right. They need to launch similar services for competitive reasons, he argued. But as S&P Global recently noted, misconducted IT changes are the leading culprit for outages and disruptions at financial institutions. An over-reliance on outsourcing could make the problems worse, it said. On top of that, there are only a few programmers left who can actually use COBOL, the primary programming language used in banks' legacy systems, Nelson highlighted. This has left many banks' IT officers asking the question, how many times in a week can we change an app without it falling over? The truth is that banking app failures or a sudden crash on IT systems are a recipe for chaos. All of these outages are happening due to a series of reasons, but one thing these disruptions have highlighted is the enormous fragility of the bank's IT systems. At a time, cashless transactions are growing more and more popular. The health crisis has accelerated people's reliance on digital banking services. But most customers remain unaware of the fact that they may not be able to access their accounts in times of crisis. To make things worse, much of the world has started to suffer from a power crisis, which may add further strains to this situation. If things get turbulent when outages crash IT services for a couple of days, just imagine what would happen when these disruptions last for weeks on end. Now, more than ever, it's essential to secure your assets in a safe place. Because whether it's a power shortage, a bank outage, a cyber attack, or a stock market crash, your assets can be wiped out in a snap of the fingers.